Curse Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello. Good morning, everyone. Say hello to me. If you're on stream chat, say hello. Good morning. Happy Monday. Let me know that you're paying attention, you're online, and you're ready to talk about what to watch in the month of June. This is a brand new trading month, brand new trading opportunities, and I want to break all of that down for you because June is really going to be a huge month in the markets for a whole bunch of reasons. Good morning, Fred. Good morning, Ben. Good morning, Peter, Chrissy, Martin, Michael, Baracha, Ryan. Who's brand new here? If you're brand new, say hello. I also want to know what you guys are trading. Are you trading Forex, gold, indices? We want to talk about all of them, but you've got to tell me what you're trading so that we make sure we don't miss talking about the instrument that you are focused on. Good morning, Bob, Paolo, Lear. Hello, everyone. We've got a great crowd in the room this morning. I'm so happy to have all of you here. So good morning. So Michael's trading MNQ. Great. Baracha, you're from Nigeria, trading FX. Fantastic. We're going to talk about FX this morning as well, the US dollar, all the events to watch. Peter, you've got your hands on everything. The one thing that I have really learned, and not to diminish what you're doing, Peter, is that you really want to just learn one instrument, one strategy well, and focus on it. When you kind of diversify too much, sometimes you can make mistakes. Sometimes you can lose focus on the real opportunities. And the same is true for you, Fred. What I do is I kind of bucket my trading depending upon the trading day. As you may or may not know, I trade ZIP and I trade Forex at the Asia Open, at the New York Open. And then the other time, beyond that slivers of time that I'm trading at the Asia Open and the New York Open in Forex, then I'm trading indices. So I try to bucket my time to make sure that the certain times of day, I'm only focusing on one specific asset class. So lots of NASDAQ traders here, not so much gold traders. I've only got one gold trader here. Gold bounced off that 200 SMA, which, is kind of the delineation between bulls and bears. And, that's pretty important. So, we'll talk about that as well. All right. Good morning, everyone. Let me go ahead and share with you my screen so we can start talking about, what's the big events affecting the markets in the month of June. Okay, Andrew, heard you loud and clear. You are a gold trader. Fantastic. So let me go ahead and share with you my screen. Give me 1 second. Share screen. All right. I'm hearing you, chat. Wonderful. Okay, so first off, if you take a look at my, upper right-hand corner of my charts, you'll see Dow is up, NASDAQ is up, ES is up. Now, pretty much every single one of the futures instruments, every one of the indices are at fresh record highs this morning. So fresh record highs for Dow futures, S&P futures, NASDAQ futures. Now, if you were trading this morning, and I was trading this morning, I'll show you what I was looking at. You will also notice that we are off the highs. S&P futures had surged all the way up to 76.22. NASDAQ futures had surged all the way up to 30,000. This is during Asia, but at least during the early New York Open, 6:30 a.m., we're at 30,500. So we're off the highs. And of course, the same is true for the Dow futures as well. And, there's definitely a battle happening at these levels. 30,500 in some ways is a psychologically significant level for the NASDAQ. And, the reason why we're having this kind of battle is because the main reason why stocks are up so strongly today is because everyone is so excited about NVIDIA's new RTX super chip. The super chip is creating new energy and hope for the tech sector, the AI sector, And that is something that, I think everyone is talking about this morning. And of course, there's ongoing hope that a deal between the US and Iran is going to be reached. Now, headline wise, we got nothing out of the weekend. There was supposed to be some sort of press conference after their big meeting over the weekend with Trump. Nothing came out of it. Iran shot more missiles at the American base in Kuwait, but the US has not necessarily responded and militarily. And so there are clear indications that Trump wants the war to be over. And he's already said he wants to be over in one form or another. And markets have already priced this in and they're moving on. Now, the one thing that you all have to be careful of is the possibility, the very strong possibility that we get an Iran deal. And, what could happen? Markets could actually sell off. Could we have a sell-off on the Iran deal? The classic buy the rumor, which is we've seen, all this movement, buy the rumor, the move on, and sell the news. Who thinks that that's possible? Who thinks that we could have a actual sell-off in the markets if we get an Iran deal? If you think so, type in 1. If you don't think so, give me a 0. Give me a 1 if you think that we could have a buy the rumor, sell the news. Give me a 0 if you think that the actual announcement will actually still lead to a Iran rally. 1s and 0s here, Paolo. What are you giving me? 1 for sell-off, a 0 for nothing. So Ben is saying 1, Cheryl's saying 1, Professor Floyd is saying 0. There really is no wrong answer here, right? Because we don't know what's going to happen until it's happened. But we'll talk about what could drive this factor. So I'm getting a lot of 1s here. A lot of you seem to agree that maybe we'll have the buy the rumor, sell the news. Maybe we'll actually have a end to the Iran war in the month of June. We're certainly much closer than we are before because, Iran is running out of spare capacity to retain the oil, due to the blockade in the Strait of Hormuz. And at the same time, so, they're motivated to do something. But at the same time, in the U.S., Trump knows that Americans are getting tired of the war. So he's also motivated to end the war. And so, there is a possibility we could get the buy the rumor, sell the news. And the reason why that's possible, let's talk about this. 1, positioning is extremely stretched. I mean, just look at this chart. What am I doing? Am I spelling this right? Positioning is extremely stretched. Let's make our font a little smaller. Just from this huge move here in the NASDAQ, you can tell that positioning is extremely stretched and the market is aggressively long. And so, the markets have already priced in a lot of the good news, and a formal announcement basically removes the uncertainty premium that is driving the market higher. Another reason is because we could have a sector rotation. I mean, think about it, right? The main markets that are driving up stocks is the tech sector. And that has been the primary driver of the overall markets. And it's because people are basically seeking safety in tech, seeking safety in AI. So if we actually get an Iran deal, what you could end up seeing, first of all, oil prices will come down more. I mean, oil prices are up nearly 3% today, but they're still below $90 a barrel. But you'll actually see an easing of inflationary fears. And you'll actually see maybe the money move away from the tech sector into what the beaten down sectors like healthcare or consumer discretionary. And so that could actually lead to sell-off in the tech stocks. And because the tech stocks had, been so overstretched and there's so much money have gone into the tech stocks, we could end up seeing the NASDAQ pull back and, the money flow into other parts, other sectors. But because, they're coming out of tech, we could actually have, the sector rotation hurt stocks and hurt the mega crowded tech and AI sector. And, to less of a benefit in the consumer discretionary and the healthcare. So that is also possible. Number 3, history. History tells us that oftentimes when we have de-escalation in geopolitical drama, I guess is the best way to put it, that when you initially may see a pop and then a reversal. So that is probably the most likely scenario. An initial pop on the news and then immediate reversal. I think many of you have been in the markets long enough to remember so many instances of this where we have good news, you get a pop, and then it sells off, and you're like, why did this happen? This is such good news. And so there's a possibility. There's very good possibility that that could happen again. So don't be surprised if it happens. Don't be surprised if we have an initial pop and a immediate sell off because the market has bought the rumor and sell the news. And and oftentimes, this very much happens. And of course, it depends on the deal quality, right? The market may be disappointed by the actual terms of the deal. If it's like a weak announcement, you may not see, the market may end up being disappointed, and they may be skeptical of the durability of any type of deal. So just be careful. We saw this before, in basically 2003 when we had the Iraq war with the same classic sell the, buy the rumor, sell the news price action. Now, I'm not saying that this is going to mark a permanent top in the markets, but don't be surprised if we get 3, 4, 5, 6, even 7 or 8% of a move off of the buy the rumor, sell the news. So be prepared for this possibility. This could happen in June. So we talked about this. Let's actually just move to another chart. So what else could happen in June? So June, what to watch? What to watch? All right. So we already talked about the possibility of Iran deal and how it could impact the markets. If you missed the beginning, make sure you rewatch that. The second possibility is this is going to be the very first Fed meeting chaired by Kevin Warsh. Kevin Warsh's very first Fed meeting. Everyone's going to watch this closely. We all know that Trump installed Warsh, or chose Warsh because he's supposed to be aligned with his views for calling for a rate cut. And so even though the last Fed meeting minutes suggest that there was talk of, possibility of the need for tightening, even though the CME Fed fund futures show us that the end of the year, so we're right now at 3.5 to 3.75%. Market is pricing in 99% chance of no change in June. Even though the market is showing that by December, it's over here to the right of 3.5%, not to the left. The market is pricing in a 50% chance of no change and actually another 50% chance of one interest rate hike. There is nothing over here, my friends. Zero forecast that interest rates will be lower than where it is right now. Zero forecast of a rate cut. So that, we're going to be listening in. His first press conference is going to be very, very important. He also has a lot of opinions about the summary economic projections, whether that is necessary, the dot plot, whether that's helpful. I don't know if he's going to talk about maybe getting rid of them. I have no idea, but that's a possibility. So definitely the first meeting chaired by Warsh and the possibility of some dovish comments could affect the dollar. Number 3, rate hikes. While the Fed is expected to maintain a dovish outlook, there is the possibility of rate hikes. The first rate hike since 2023 by the ECB is expected this month. So first ever interest rate hike by the ECB is expected this month. And we could have a BOJ rate hike. Let's take a look at dollar yen. Dollar yen is much closer, my friends, to the upper right-hand corner of the chart than the lower right-hand corner, right? The BOJ, it is now confirmed. We got the data from the Ministry of Finance. It is now confirmed that the Japanese came in twice in the month of April to basically sell dollar yen, buy the Japanese yen. But, look at this. Market didn't care. It shrugged it off. And the reason for that is they don't think that we're going to necessarily get policy to be aligned with action. What they want to see, what dollar yen traders want to see is they want to see BOJ hike They want to see intervention, which has already happened on the downside. And they want to see Fed, where is this? They want to see Fed dovishness. And, I don't think we're going to there's no way we're getting a Fed cut, but they want to see these three things, which Fed dovishness means a pullback in US yields. So these are the three things that need to happen in order for dollar yen to move this way. And there's a very good possibility this could happen in June. In April, we already have number 2. So, I mean, that's like, done. So we're waiting for number 1. And there's an 80% chance of a rate hike from the Bank of Japan in June. And there's a very good chance that Fed Warsh could make dovish comments in his first ever meeting as chair. Now, should he make dovish comments? Now that oil prices have fallen below $100 a barrel and we're at below $90 a barrel, he certainly has the justification for that. I mean, if oil was at 100, that would be, or above 100 or 120, that would be a big problem. U.S. yields have already come up quite a bit. U.S. 10-year yields, I mean, they shot up to as high as 4.68%. They're down a quarter basis points, 25 basis points. So they're off their highs, but they're still at pretty lofty levels. And the fact that they're still at pretty lofty levels means that the Fed has the leeway to be a bit more dovish. So Warsh is not going to stoke the fire by of higher yields by his tone of dovishness. So between the U.S. yields, there's a possibility that he could give Trump what he wants and be dovish, or talk about possibility of leaving the door open for an interest rate cut this year, which is absolutely not what the market is pricing in. So we have the possibility of a BOJ hike of June. We have the intervention already done. And we have the possibility of Fed dovishness from Warsh in June as well. So all of this could be just the perfect storm that dollar yen needs in order to pull back. So that is something that I am watching very, very closely. Now we have a question from Jin Ming about why is ZAW, is the Fed hawkish and why is the dollar weakening? Well, first of all, the dollar is not really weakening, right? We're just mid-range here. It had fallen, it had rallied. The Fed itself and the Fed minutes are definitely less dovish than market had thought or anticipated or priced in. And that is why we had this jump in the dollar index. But the market's waiting for Warsh. It's waiting for non-farm payrolls on Friday. So the market is waiting for so many different things that, could very much lead to a movement in dollar yen. Aside from that, what else do we have? We have the possibility of a ECB interest rate hike. The first ever since 2023. Now, Eurozone data hasn't been all that great. We've actually seen more mixed Eurozone data than positive Eurozone data. But, Eurozone data hasn't been all that great, but the language from the ECB has been quite hawkish. And so if the ECB delivers an interest rate hike, which would be the first ever since 2023, it's definitely not priced into the euro. We could see a rally in the euro. If we add in my favorite moving averages, of course, on a technical basis, we need a close above 117. Right now, we're still below all of the major moving averages, which is not helpful. But we close above 117, then we have a very strong chance that we'll see 118.15, 119, maybe even 120 in the euro dollar. And that would come out of a hawkish ECB along with, rate hike from the ECB along with ongoing hawkishness. So definitely pay attention to that. Now, the euro does have some headwinds. What are the euro headwinds? So we look at euro outlook. Pro is ECB hike coming. Con is we have, data, including today's German retail sales, Eurozone unemployment data softening. And July 4th is when the U.S. has given the EU until July 4th to ratify and implement the trade agreement. Otherwise, the tariffs, they're threatening, tariff increase if that does not happen. So but that's in July. So we're just talking about June. June is going to be ECB rate hike as well as the data softening that could happen. So those are the things that I'm focusing on in the month of June. If we go back to, I think it was our NASDAQ chart, we said, we talked about the Iran deal. I think we wrote it over here. These are the things to watch in June. Am I missing anything? Chat, let me know if I'm missing anything that should be on here. I'm going to let you type in if you think I'm missing anything for the month of June. Of course, this week, the main focus will be the U.S. non-farm payrolls report. And in terms of U.S. non-farm payrolls, we'll talk about gold, don't worry. In terms of U.S. non-farm payrolls, I'm going to pop in here. And let's just zoom in a little bit. So we had, we had decent non-farm. I'm trying to get this bump off the screen. So April and, so we had decent non-farm payrolls in the month of April. April and May were the two, relatively strong non-farm payrolls reports. And I think the two strongest combined non-farm payrolls growth that we have seen in some time. So, that is definitely something that, we are, looking for a pullback from. The market has a forecast of 95,000 against 115,000 after 2 decent months. But what you've got to watch is the average hourly earnings and the unemployment rate. Now, average hourly earnings growth is expected to accelerate, but the unemployment rate could increase. Non-farm payrolls. Now, the thing with non-farm payrolls is we always say that the importance and the market movingness of non-farm payrolls depends upon whether or not it's actually going to affect the Fed policy. And as you have seen from the CME Fed Fund futures, the market expects nothing from the Fed in the month of June. Rates are expected, 99% chance that rates are going to remain unchanged. And because of that, even if we get 95,000, it's not great. The market certainly wants 120. They always like good numbers, but it may not hurt the markets all that much. You may only see a mild pullback and a brief pullback if we get 95,000. Even if we get 85,000, if average hourly earnings growth grows and unemployment rate remains unchanged, I think you're not going to get much more movement. So what could actually trigger a meaningful movement in the markets? So let's see. NFP game plan. We know the forecast is 95,000, right? So what could lead to a rally, market rally? And this is true for the dollar. This is true for stocks. A market rally won't take much. I think, 115K, earnings growth, steady unemployment rate, that's good enough. Of course, 120 would be even better, just something better than the previous month with no downward revisions. So it won't take much for the market to rally because it's already rallying and because they think that, it's not going to affect the Fed and their policy. What could lead to a market sell-off? That is where the risk is. I think we need to see 70K or lower. That's when, and maybe even more than that. Maybe we need to see 65, probably 65K or lower is when it really gets to be a bit disappointing. And you want to see steady earnings or weaker earnings and either higher or steady unemployment rate. So this is the game plan for the potential for an NFP market reaction. We're going to be trading NFP live with you on Friday. So, definitely join us for that. But this is basically what we're going to be watching in regards to non-farm payrolls and the potential action for non-farm payrolls. Now, you guys were asking about gold. So gold, as I said earlier, gold is basically bouncing. It bounced off the 200 SMA. The 200 SMA is really like the ultimate delineation between bulls and bears. And the fact that it held the 200 SMA is good news. And, it's a great potential to buy. On a technical basis, it still looks like it could pull back to the 200 SMA, but for the most part, I think, right now it still remains bullish. And I think, we've got a bunch of moving averages above that, but once we clear the 50 SMA, I think we're gonna, head back above the 100 and upwards. So the 20, I always like to look at the 20. That is definitely, something that I think is important on a short-term basis, and the 50 should roll down. But for the right now, we have a short-term potential for a pullback, but until the 200 SMA breaks, it's still overall bullish. And of course, equities are bullish as well. Now, in terms of the big events to focus on this week, today we have ISM manufacturing data from the US. We had a good Empire State survey. We had a good Chicago PMI. Philly Fed was a little weak, but overall, the market is looking for the manufacturing numbers to be decent. We have inflation data from the Eurozone. That's going to be the most important. That plus the comments from Lagarde will be the most important event risk for the Eurozone this week. And that is expected to be stronger. Although I think there's risk to the downside for this because we did, obviously have a pullback in oil prices. Australia has GDP numbers that is expected to come in weaker. ISM services expected to come in stronger. ADP expected to come in stronger. Thursday, we don't have much at all. And then Friday, we have the jobs report from Canada, we have the US jobs report, and we have the IV PMI report from Canada as well. And Canada is really suffering. It's really lagging behind. Job growth has been very, very weak in Canada. If you look, or a better word said, it's been more, job losses last month. The previous month before that, very tepid. Really, not great numbers. Canada's economy seems to be really struggling under the tariffs, and that could really worsen as Trump seems to be reshifting his focus onto the tariffs. Earnings not doing great. Unemployment rate could tick up in Canada. IV PMI expected to pull back. So Friday is going to be the big day for the U.S., but I think ISM services is also going to be very important. ISM manufacturing is also going to be very important. These are what I like to call the leading, the most important economic reports because they are reflective of what's happening in this month, whereas everything is reflective of what happened, in previous and, is much more dated. So these are very, very important. I mean, you're absolutely right, Fred. Canada is in the outs with Trump. He's not happy with them. So that is definitely something to pay attention to. Now, getting back to the charts. You can see, the Euro outlook, definitely something that is significant. And with the Euro outlook here, it's below all of the major moving averages. So right now, not doing great, but still the possibility of a pullback in the
Guys,
Euro.
sorry, I just want to cut in because there's lots of movement in the equity space. Iran stops message exchange with the U.S. in protest against Zionist crimes, whatever the fuck that means. Iran's president, Pakistan, we are to ensure Japan ships passage, blah, blah, blah. But basically, markets are still selling off because it looks like tensions are ramping up. Just letting you guys know.
So Boris going to roll into trading. And this is what we talked about earlier, right? Which is that, there's a battle here because, first of all, U.S. yields are up, oil is up, and the headlines are not necessarily good. So, yes, he's right. There's absolutely a chance for a pullback. Any setups right now, Boris, or are you just waiting?
No, there was a lot of setups, but in the last few minutes, just lost some momentum. There'll be more. Post news, there's always a ton of setups for us. I have a whole bunch of new stuff to introduce to you. Kathy made me kind of went through the whole BFF indicator and told me it was completely incomprehensible. So I made it much, much more comprehensible for everybody. I color coded all of the dots. I made it very, very easy. So I'm going to walk you through a whole bunch of.
Well, Boris, you should probably run it through me first so that I could tell you whether it makes sense or it's not.
No, it makes sense. It's good. I like it. I'm very happy with this. It's much more than that.
Today is going to be a great day to trade. As you see, as Boris said, we were just watching this. Markets completely flipped on a 15-minute chart basis. Markets completely flipped. So there's going to be a lot of volatility at the open. There's going to be a lot of volatility in the markets. We're bouncing off. I love this 200. We're bouncing off this 200. Although, for indices, I wouldn't make it too much of it. So if you want to trade, you want to get funded, I'm going to tell you a little bit about our sponsors. Apex Trader Funding is still running. It's 90% off sale.
Ridiculous deal on Apex Trader Funding. I think $19 for the 5 lot of 50Ks. I mean, if you're looking to just sort of learn how to trade, or if you're really unsure about any of your strategies and you want to give as many strategies opportunities as you can, the 5-pack of 50s is the cheapest thing out there I've ever seen. It's $19 for a 50. You buy a 5-pack of them. We're going to trade NFP, so we're going to be able to do new straddles on that. It's a really, really good deal.
Yeah, so they made a bunch of announcements over last month, including the 5-pack bundle drops the cost to 19, including no activation fee option. So there's a lot of, very nice features that they've launched. Also, I want to tell you a little bit about, Ola Prime Circle. They, for those of you that trade CFDs, they also launched something that is really, really neat. Prime Circle they're the only firm that is rewarding traders that are doing well by introducing all of these new incentives. That includes up to $2 million in capital, extra 20% off every single challenge. You get 30% off all the time with code EDGE, free account resets. 2 free resets within the past 2 months. And I really like this. You want to switch around their platforms because they're, launching some new platforms. You want to try different platforms, or you have a reason to go on a different platform. When you hit Prime Circle, you can have a free platform change. So they're really trying to, introduce a lot of steps that make that are much more trader friendly.
A loyal customer layer that is very unique in the business that I think is going to it's going to revolutionize how prop firms are going to deal with their customers.
Absolutely. And on top of that, they're the only ones submitting themselves for audit with Deloitte. They have the fastest payouts. So if you're trading CFDs, use the EDGE code for 30% off. If you're trading futures, Apex Trader Funding, definitely look at their deal, 90% off. Tradify, Lucid, you can use the code EDGE also for their best discounts ever. So make sure, you're doing that. And, this is a great week to get funded and get paid, because we're going to have a lot of volatility, especially starting with today. We're going to have a lot of movements, and Boris is going to trade them live with you. Any questions for me? So does the 5-pack have to be passed in 30 days? It does. There is Apex does have a 30-day expiration.
But, if you're looking for, you can trade multiple strategies at the same time. You can trade one high leverage, one low leverage. This gives you an enormous amount of flexibility to try out lots of different ideas for literally the price of like a single account. So think about it in terms of diversifying your strategy for essentially the same price. That gives you a lot more chances to get funded. You saw, guys, I bought the 5-pack last week, and we used it for the new straddle on, I think it was on GDP, right? So that didn't work. And then after that, I just simply did a single straight trade in the afternoon and got funded. The point being is that there's like lots of different ideas of how you can get funded when you have lots.
I bet, Boris, you're probably going to get the 5-pack and get funded off of NFPs, right? Because there's going to be a lot of vol around there too.
Exactly, right. We actually reserved 2 for the NFP, so we have some.
But this deal ends before NFPs. This deal ends in 2 days. So 2 days and 14 hours. So maybe in the next 2 days you want to grab that deal.
Yeah, great point in terms of like buying them now so you can reserve them. Because remember, you have 30 days to use them. You got plenty of time to use them, and especially with Apex. With Apex,
for futures, Apex is the best for those of you that are, just starting out, because they are truly the cheapest when it comes to, kind of right off the gate. Now, they do have they have no activation fee option. So you could drop your 50K, no activation fee, you can drop it down to $69, which if we compare it to, let's just take a look, Lucid and Tradify, which are also, really great firms. If you take a Lucid, 50K eval is $129.50 or $98 for the flex. And if you use code EDGE, you get a slightly more discount off of that. But even Tradify, I think there's $1 more than Lucid. With Tradify, with their select on a 50K, if you use our code, it seems like they raised their price, but on actually growth, it's $94. So even with the activation fee option, they're the lowest price, $69 with Apex. Now, if you want end of day trail, they're still the lowest. So, this offer is not going to last for much longer. Make sure you take advantage of that. Yeah. All right, Boris, they're all excited about the movements in the market. So you want to take the screen? If there's no additional questions from me, yes, we're getting movements now. Although it seems like we paused a little bit, but I think we're going to have a continuation soon. Yeah. Because we're heading into the open.
Yep. Hang on. Let me just organize myself. So Kay is going to come off the screen. I'm going to take the screen back. Somebody is asking about the coaching course. I have the coaching course here for you guys, so you guys are all good to go. Let me just organize myself. Just 1 second. Okay, and we can go with me. Let me add that myself on here. Okay, very cool. Hi guys. Good morning. Good morning. Good morning. Good morning. Good morning. Sound check, mic check, vibe check. Everybody is good. Everybody's seeing me fine. So you see, we see the red headlines on Iran. Everything is good. I am showcasing. So today is going to be a preview day, and I want your opinion on this because I don't want to update the indicator until you guys kind of were comfortable with everything that I did. I'm going to show you everything I did in the indicator. I think you guys will like it. But let's put it up to a vote and let's see what everybody feels about it. So this is the latest version of BFF indicator. By the way, let me put I actually made a full description of this indicator so everybody can read everything that's inside of this thing. Here's the link. If you guys want to follow along with me.
Is there a link in this as how to get the indicator, Boris?
There is no link on how to get the indicator there yet because this is all preview. There will be a link on how to get the indicator, but that's going to be a separate conversation you and I are going to have. But for now, I want you to this is really for people who are already using the indicator, and of course, you can always get the indicator by joining my coaching. That's always an option. I just put the coaching link. There was somebody who was asking for the coaching link. The coaching link is right up here. As a matter of fact. I'll be happy to pin this for you if you guys want me to do that. I'll pin it in just 1 second. But the coaching is always the best way to get all the indicators because you're going to get my indicator, Kathy's indicator, everything else. But just looking at the changes in everything that I did. First and foremost, I changed all the dots and I put a whole legend over here. And if you just simply move your mouse over the legend, it will tell you exactly what each dot means and what the function of each dot is.
All right, I have to ask you a question, Boris. Why can't it say what it means instead of saying the color?
What do you mean? Because it's too much.
Why does it have to say amber? Why can't it just say amber means bullish or something?
No, too many words, and it's too complicated a system. It's not that simple of like just bullish, bearish. There's a lot of nuances in there, and this is just if you hover over it, it makes it much easier to understand.
I think we need to work on this because it could be if it's bullish level 1, bullish 2,
no,
bullish 3.
Not like that. KK, do me a favor. Let me talk to them. Go away. Go away.
But you're asking my opinion. I'm trying to give you my opinion.
No, I understand.
Andrew, I don't like it. What do you think about Andrew?
I'm asking their opinion because this is not an indicator that can just be understood from bare bones. It needs to be fully educated. That's why there's a whole big educational component to it that I put there. The dots themselves require lots of education. Dots have different meaning for every different color, right? I basically changed the white candles and the white dots into neon green and hot pink to make them more consistent with what we're trying to do. So to summarize basically what we do, the neon green is a super strong pull away bullish candle, right? Super strong pull away bullish candle. The hot pink is a super strong pull away bearish candle, right? The green and red are simply candles above or below the SMA. And the amber and the blue are the transitional candles, right? They're transitional candles, right? Transitional sell, transitional buy. I mean, we could, if you guys, I'm going to leave it to you. If you want me to change, move away from the color and just name the candle, we could. I could say, generally up, generally down, super bearish, super bullish, transitional bullish, transitional bearish. Is that easier for everybody to understand? Let me know if you think that's a good way of doing it, or if 100%. Just color
low bull, super bull. Hold
on, I'm asking them.
It's just like amber and green. Like I want to be able to see it and be able to know what it is immediately without having to hover, because I didn't even know I need to hover.
Now I'm going to keep the color. I'm going to keep the color, Cheryl. You mean keeping the colors as they are?
Andrew, what do you mean by yes?
Yeah,
can you clarify
guys,
yes, which
yeah,
one?
guys, when you're making comments like yes, no is completely unhelpful. I need like a full explanation of what you guys are thinking about.
I'm just saying what I would want is that if I want to see this, I want to be able to, because I wouldn't necessarily know that I need to hover. So if Boris is telling me that neon means Super Bowl and neon green have the same number of letters.
That's fine. We could change that. I mean, what do you guys think? Let's do a little bit of a poll here. You guys tell me what you think about that. We're going to put a new poll here. Should we do it? First one is just color, and the other one is like, Super Bowl, bear, etc. Option one, option two.
You want it to, we're going to have the color too. It's just that it'll say green circle, and then it'll say, whatever it really means. Just like, most accurate astrologist says, make it idiot proof. I'm the idiot. I want it to be idiot proof.
Whatever astrologist says, I pretty much do, because he is the guru. Boris, make it idiot proof. You're with Kathy. Okay, all right, cool. So let me see what Tony said. I hope Boris still has to pay Kathy $1,000 every time I change his BFF dots. That was the one, she made it for me, so she made me change it. So it's on her. Idiot proof. Okay, so no problem. So it looks like everybody wants to do the Super Bowl, super bearish. That's fine. So we will change that. That's why I wanted to kind of get a feedback from you guys before I started updating the stuff, because I want your feedback on all of this. Okay. So the second thing that I wanted to kind of mention is the second thing that's really, really cool about this. Okay, I guess we can take off the poll. Let me just get rid of the poll here. The poll was pretty definitive on that. Okay. The second thing that I wanted to show you, which is also very, very cool, is that we now have embedded into it the decision support system, the actual data to tell us which hour is a tradable hour and which hour is a fadeable hour, right? And it's even better than that. If I click on NASDAQ, it will give me NASDAQ data. And if I click on gold, it will automatically give me gold data. So for example, you can see that gold in this hour, the 9 o'clock hour Eastern time, and by the way, this will update to your time. So it's updating to my time because I'm on the East Coast time, but it's fully synchronized to UTC. So if you're in Dubai, it will tell you, even though what time is in Dubai, whatever it is, it's like 6, 7 o'clock at night. It will tell you the 6 o'clock hour is a strong bullish hour in gold, because it's fully adjustable to your time frame. So all of those things have been really taken care of. But what's really, really cool is that switching between symbols will give you different data sets. And more importantly, you can also see on the bottom here, it tells you which hours are the super good tradable trend trading hours for each instrument. So for example, if you're sitting if you're sitting at the 8 o'clock hour and you see that gold at the 9 o'clock hour, on the East Coast is going to be a super tradable hour, and you are like in a fade, if you are in a fadeable trade, if you're in a discontinuous trade, you may not want to take one. The point being is that this gives you enormous amount of confidence in terms of making the right decision. Do I want to take the buy, or do I want to fade the buy? Do I want to take the sell, or do I want to fade the sell as a condition, right? You like the hourly data? Yeah. So the hourly data is hopefully really, really this. So wealth charts, all of that will, I say a month from now, when wealth charts opens up its coding, and you're allowed to basically code to wealth charts, all of that will be available on wealth charts. For now, just assume wealth charts is not going to be there for about a month at least. It doesn't have a trend bias, Andrew. Here's the point. Here's the really brilliant thing about how this thing trades. We don't care about trend. There's only two things that make money: continuity or discontinuity. In other words, if I'm going to bet, if I'm buying right now, it doesn't matter if it's a positive trend or negative trend. If I'm in a condition right now and I'm buying, the only thing I'm betting in the next minute or two is that the price is going to continue going forward, or the price is actually going to completely reverse, right? That is our whole trading strategy. That's the whole idea of scalping, right? We are, as scalpers, only care about what is the next 5 minutes going to be like. And what this shows you in a very, very intelligent fashion is, so for example, NASDAQ right now, this is why you always lose money 9 o'clock in NASDAQ trading our strategy, because this is the graveyard of continuity strategies. Every single breakout is a fake out in the 9 o'clock hour. You see how it's very, very red. It's showing you very barely 50% moves. This is based upon a 10 target 20 stop. So it's a very negative risk reward ratio, and it still barely can make 50%. It just tells you how discontinuous this hour is. Now, the really cool part, and the thing that I want to kind of share with you, is that we actually have a strategy for discontinuity, for fading stuff. I'm going to share with you today. I'm going to trade it with you today, and it's really cool. So we have a strategy that works perfectly against our strategy in hours when our strategy doesn't work. And I'm going to share that with you today as we start trading. So we can make money when things are choppy, and we can make money. This is basically chop. We can make money when things are choppy, and we can make money when things are continuous. Now, gold is a beautifully continuous trade in the 9 o'clock hour. So, and I've already been trading gold here on both charts a little bit today, clipping a little bit of money. And I'm going to be trading more gold today based upon the signals that it's giving us in a continuous manner. And then I'm going to be trading NASDAQ in a discontinuous manner. I'm going to be fading NASDAQ, and I'm going to be trading gold as the day progresses. So the 9 o'clock hour, it's about half an hour left to the 9 o'clock hour. Gold, obviously, negative trend, negative sell block. So if gold develops another, red dot, we have a purple dot, red dot, we're going to be taking gold to the downside. NASDAQ, on the other hand, is just going to be a chop city trade. So we're going to ignore all of these trades. Doesn't matter, that they're it's nice that they're making money. What we're going to be looking for is any kind of a change of trend trade, and then a confirmation the other way. So for example, if we get a yellow candle followed by a red dot, we're taking that. That's a discontinuous trade. If we have a blue candle followed by a white dot, that's a trade we would have taken, although it would have been really, really choppy. But the point is that we can trade the reversal of continuity, which is discontinuity, just as easily as we can trade continuity with all of the dots and all of the structures that we've set up. Because what's blue? It's a transition it's transition from chop to bullishness, and yellow is transition from chop to bearishness, right? And we're just going to take that transition candles are the lead candles in a chop signal, and the neon candles are the lead candles in a trend signal, in a continuity signal. It's just that simple. So does everybody understand that? That's what makes this so much more powerful than it's ever been, because we now have this incredible amount of statistical data to have confidence with making trades the way we want to make trades. You like that? That's better. Who else like that? I mean, let's go. I want to hear from you guys. Stop being such wallflowers. I want to see comments, because if you don't comment, you don't count. It's like voting. So I want to hear feedback, comments, criticisms, anything, so that we can get this really, really the best possible we can get it. Yes. Yeah, I would be, I'm going to make the modification. I mean, it seems like the only modification that people really want is renaming the colors into action. So, action named labels. Everybody seems to be pretty good, and it's pretty clear what the statistical table up top is showing you, right? I think you guys are all in sync with that. Now, here's what I want to show you. So we have a yellow candle. This is NASDAQ. And we have big green continuity candle. Now, yes, you could make money here, but we're not going to trade it. We're not trading it because this is not a good hour. Just because a single trade is working doesn't mean we want to be making a bet here. It's not a good statistical bet to trade continuity. However, and this is where it gets interesting, we get a yellow candle, we get a red candle somewhere down the road. Like it breaks this whole upside move and starts to go, choppy, discontinuous the other way. That's going to be a signal for us to go short, right? In the meantime, gold is kind of quietly reversing. Gold is in a downtrend, but reversing right now. And actually, well, let's see. Gold is just really choppy as fuck here. If I get a red dot, I mean, gold is really. It seems like this news flow is creating lots of confusion here in gold. What I was going to say is, gold looks like it wants to make a bottom, but hasn't shown us any kind of continuity signal for a bottom. We would need a green dot for us to get long gold, right? To get a continuity signal. I'll ride whatever horse you have for us. Looks good for the hourly data. You have to work it first. You have to. Sorry, what do you mean? You want to trade it first before you give some feedback? That's fine too. That's a fair point. So, but here it is: white dot, green dot, continuity trade in gold. 11 seconds left. Let's go. Let's make it happen. MGC. Where's my gold? Buy. Okay, I'm long gold. Stop's going to be underneath this candle over here. Looking for 2 points. And there we go. Gold confirms the continuity signal, and we're good to go. So this is, what is a continuity signal? It's the dot confirm or the pull away, right? Dot confirm over here. As I said, this is a good hour. Clipped it up. Good to go. And just we just keep doing that and doing that. And adjust every hour based upon where the statistics tell us the highest probability trades are. What it does is it makes you trade on the right side of the market most of the time, which is very, very cool. Now, NASDAQ is discontinuous, but it's actually really rallying. And it's having lots of continuity trades, which happens. This is fine. What I want to kind of impress on you is, just because it's doing something opposite of what the statistics say to us doesn't mean that over a long period of time that these are smart moves to make. We all know that we get lucky in the 9-10 o'clock hour, sometimes hitting the continuity trades, but a lot of times it just flushes us right down the tubes, right? And so what we want to do is just be selective and take only the best possible statistically testable trades. And in this case, those trades, the only trades that are really good during the hour. Now, the 10 hour, by the way, in NASDAQ is actually a good hour. See that? All these green hours are what I call prime hours, where both strategies produce 70% or better, setups. So you have like a really high confidence 7 out of 10 trades on the continuity side of both of these strategies are going to work, right? Look what's happening now. We have a rally back up to the essentially the Iran news. We have a transitionally bearish candle, right? Transitionally bearish candle, which is amber. And we can watch that. And, and if that stays in place, and if the transitionally bearish candle is followed by a bearish dot, by a red dot, we're ready to go short this thing. Yeah, we're not, the buy order block now exists only kind of like as just a support mechanism. Like if you really want that, you can have that. But remember, generally this is testable against continuity. The buy order, with buy order block or without buy order block, it stands the test of time. The buy order block just tells you the general, direction of the move, which obviously helps, but not critical. Yeah, Gloria, I've been thinking about you. I think this is really going to keep you, make you very happy, because it's going to, basically, you're only going to follow the dots when, the hourly data tells you to follow dots, or you can sit back and not do anything at the other hours, or you can try to trade chop in a very, very tactical manner, like I do. But those what I call those golden hours, the super green hours, when both strategies really, really work, you can really trust the dots at that point, right? All right, so I'm looking at NASDAQ right now. Remember, I told you it's a discontinuous hour. We have a transitionally bearish candle, second transitionally bearish candle, but no red dot yet, because the slope is still positive. The market is still in a more of a positive mode. So we'll see if what time is it? 9:42. We still got 18 minutes to the market. But here's the other thing: is because that the upcoming hour is continuous, where the dots really have strong probability of success. At around 10 of the hour, 9:50 or so, I may, if I have a discontinuous signal, I may ignore that, because I know I'm entering into a more productive hour for dots. This is another reason why I put all those all that data in front of you, to kind of give you yet another edge. The whole point is this gives you lots and lots of statistical edge. And remember, these things are going to be updated like every month, because this is like the last 30 days worth of data, which is the most important data. The most recent data is the most important data, because it gives you the highest quality of probability. And then if the data changes, those hours may change, and we'll dynamically change them. So I'll update them. I'll update the data. It's very, very cool. It's all very, very dynamically done. Yeah, we have news. Thank you for reminding me, English. Yeah, that's exactly it. Astrology. I've sort of like I've even moved away from our two bread and butter setups, like the pull away trade and the dot continuation trade. I really simplified it. Like, you're right. Once you kind of get used to it, you're like, oh, I'm in a continuity zone. I'm just going to follow the dots. I'm in a discontinuity zone. I'm going to try to follow the reversal candles. And that's it. It's literally becomes as simple as that. Because if you were trading gold, just to give you an idea, if you were trading gold 9 o'clock hour, which is a highly continuous hour, you literally could have taken every one of the red, of the red continuous dots, and would have eventually almost all of them resolved, right? You could have taken the green dots, which is what I did here, and it kind of resolved, right? Now gold is coming to the gold is actually coming up to the discontinuous hour, but here we have a trade. Should we take it? I'm a little bit late on it, but we can take it. Sell market against this, and see if it'll work. Now it's 15 minutes to to the open. Let's see. Maybe it'll pop for us. Come. There we go. Come. Let's go, baby. Ugh. Gold is just so jittery. All right, oh, we got it. I got it. Good. I got almost all of it. So yeah, I mean, this lets you kind of trade. I'm not you guys know, I am really not a lover of trading two assets at the same time. But if you're going to do it, this is the only way to do it, where you have the statistical data on your side, and you can just try to extract it as much as possible. To focus on just sort of like one idea at a time and make it happen. So here, sorry guys, this is actually a trade, and let's see just how discontinuous we are. We're going to go to a different account, 50 account. I want to go to MNQ. I'm a little bit late on this, but let's give it a shot. I'm late on and I'm wrong. I'm gonna eat this thing. Yeah, I'm gonna eat this trade. This is why I wanted to switch accounts. Sorry, I'm just trying to adjust these charts because they are so spread out. Also, we're in front of news, which is another silly thing to do. But I'm trying to see if I could fade this move. Basically, I'm trying to fade this move a little bit here, and it's not going to work. It was close, but not cigar. No cigar here. Oh, okay. So I tried. This was kind of a legit. This is a purple dot against the yellow candle, but it did not discontinue. The market today, because of news and everything else, the 9 o'clock hour is actually much more of a continuous hour than before. And again, this is a point that you're not every trade is going to work for you. The whole point is, even when they all work for you, 3 out of 10 are going to not work for you. But because it's very limited risk, limited size, we will recover from that trade easily. Maybe even a 10 o'clock hour, we'll just simply take continuity trades. As I said, this is actually. Let's see. If it stays a continuity trade, maybe we'll take it. Take it the other way. See if it comes up. There we go. And the continuity trade. So why did I switch over to continuity mode? Because we're getting close to 10 o'clock. That's a pretty strong continuity time for the NQ. NQ is clearly displaying lots of continuity, properties right now, more or less. And again, 9 o'clock hour, literally the worst hour to trade. Like all the analysis said to me, never trade the 9 o'clock hour. But since we're always trading 9 o'clock hour, I'm trying to make lemons out of lemonade here. I took the trade, and the thing that I like taking with all these trades is, I know I talked to you guys about using fixed stops, but I actually not. I'm using the candle, the prior candle stop as my stop, and I love that because I don't mind getting stopped out 2, 3, 4 times in a row because I can always increase my size. I love the fact that I get stopped out for a small amount of money. If I'm stopped out for a small amount of money, I can always bring it back. If I'm using large, wide stops to try to make small definitive targets, it becomes you really have to be super accurate to kind of run the P&L positive on everything every single day. Yeah, I understand, Ben. I understand, but I didn't want to unleash the TradingView chart on you guys until I got a little bit of feedback. So I promise you, I will. It's easy enough. It sounds like the only I wanted to just make sure you guys were okay with the what do you call it? Statistical table, with the candle legend table, and with the recoloring of candles. And it sounds like everybody is good, and we just simply need to just rename the dots, right? It's the only thing that we need to do. Once we do that, everybody is gonna be able to get access to it, which I'm probably going to be able to do that before Asia session tonight, so you guys can have it all for Asia session. I'll update this, and then by tomorrow you guys will all have it. Sound good? Okay. So I think we're going to chill until we get the ISM data, ISM manufacturing today. Maybe a positive data. We'll see. Market generally seems to be shrugging off the Iranian news because, here's the thing. Price of oil is down, right? Why? It's kind of interesting. I think it's because they're able to circumvent the Strait of Hormuz delivery. Lots and lots of alternative pipeline moves here. By the way, this is it was just showing me another yellow purple right now. That's a sell, right? I want to go back to be a glutton for punishment here. All right, I'll take it just for shits and giggles, and I got it done. Okay, so another quick scalp to the downside from this structure. Why? Because we're still in a discontinuous mode. Yellow is the transition to bearish. The purple is a confirmation of bearish. Just like blue is a transition to bullish, and the white is a confirmation of bullish. Right? The trade is always enter on the white or the a purple dot or the green or the red dot, whatever is the case. With the high of that dot is your stop. So this was a quick, clean little scalp to the downside. I'm trading for 5 points in NASDAQ and 2 points on gold, but the stops I'm keeping variable. Yeah, that's true, Ben. And that may be the story. I've just stopped trying to understand what's really going on over there. I feel like it's a mystery wrapped in an enigma, covered up by some other secret. It's almost impossible to try to figure out what the hell they're doing. So. So, I'm just going to let the market try to figure it out for us. Gold is got a trade here. I'm kind of missing it. This is, that's always the it's always the story when you're trying to trade two assets at the same time, because gold had a continuity sell trade over here. We could have taken it very, very nicely. I mean, I'm happy. Honestly, guys, I really like the only way I can trade two assets is, and it's always going to be the trade-off. The only way I'm going to do this is I'm going to say this hour we trade gold, and it could be the shittiest hour ever for gold, and all the money is made in NASDAQ, and you guys are all screwing me. But that's the only way to do it, because otherwise, like gold is a clean, clear continuity trade. Whole bunch of trades for us in gold. Here trade. You can almost take every single dot in gold and make money out of it if you wanted to. It's all there for you. But I can't look at, even though I'm sitting here at 6 screens, I'm just missing trades all the time because they're fast. So you let me know, if you guys want to trade one instrument per hour, or not. But like it's just hard to focus. Anyways, the 10 o'clock hour for sure is the NASDAQ hour. If you want to make the 9 o'clock hour the gold hour, I'm happy with you. But trading both of them at the same time, I suck at that. I'm happy to offer you the tools, But if I'm trading NASDAQ and somebody says, look at how gold is doing, great. I'm glad you're trading gold. I'm not. I can't do it. I need to focus on one product. I'm just not. Even if I'm looking at like lots of different screens, I just these trades are too require too much focus for me to kind of do it that way. So let me know. Let me know if you guys want to subdivide it by hours like this or not. I mean, I'm like for example, at night when we trade for our friends at Ola, I'm definitely going to be trading gold dominant in this particular structure. And you see that the 7 o'clock hour in gold is a good hour, 1900 hours. So that's very, very dominant for us. But, for now, no. We got about 5 minutes to go before the ISM services. Slightly lower on the S&P manufacturing. Oops. Calendar. See what the ISM is. That's coming up in 2 or 3 minutes. Who's new in the room here today, guys? Say hi to me. We are, as usual, trading like crazy. The game plan here is to run every account $100 up from the start. So this account, I actually ran the 48, about $58 up. This one, we just basically break even right now. I'm going to try to run this one. What I try to do is I run it to the next $100 level. So let's see what the 61 is. This is a 200. They're all like, I actually left them all pretty clean. So maybe what we'll do is we'll just try to run this one to the 900 level, and then go on to the next one. Hey, Chris, nice to have you. Two minutes to the to the event. Minute 39. I really don't. Isn't it nice to have the applet now on the on TradingView? It makes it so much easier for us to see the data. We'll have that for the NFPs. It'll be super cool. Oh, I know what else I need comment for everybody from. Tell me what you guys think about this web page, and tell me if you like it, not like it, if it's kind of clear or not clear. Let me know. I'm agreed. Now, honestly, Michael, the Paw Patrol is I mean, it's fine. You could use it within the structure, but like it wasn't. This is a much more complete structure, and it's much easier to follow the dots than try to figure out pause and dot. The pause candle, I think, is hard for a lot of people to kind of figure out. I mean, it's not that difficult. The big, you could incorporate the Paw Patrol into the whole thing by just basically trading the continuity. Like right now, we're obviously in continuity mode. Here comes the data. Where's the data? They haven't printed it yet. Here's the data. Better. Prices paid lower. It's all bullish. Employment, good. I told you manufacturing is good. I keep saying that the surprise that nobody is really paying attention to is manufacturing. All right, data is bullish. Price action is bearish. We have continuity trades, and NASDAQ is in continuity hour. So you like, Miguel? Are you talking about the web page that I just posted? You like the web page? I'm asking sort of like responses on the web page. And what do you agree with, astrologer? Sorry, I'm just trying to get to the thread of what everybody's talking about. Okay, so what's the trade here right now? Continuity trades are in play. This actually reminds me, guys. By the way, I know we've left ORB kind of behind for now because I've just been too busy, like the ORB dots. But there's no reason now that we have the statistical framework for us not to have like ORB, like a completely different indicator for the ORB dots with statistical backup as to, does it, which days does it work, which days it doesn't. Really gives us a really interesting statistical edge on trading the ORB as well. Continuity is better than pause. Yeah. Low of the day down below. Yes, this is the New York low right now. We don't have a continuity trade. Like right now, what we're looking for right now would be a hot pink candle to pull away. A little bit of reversal price action here. Oh, look at this. Purple rain. Oh, what's going on with Hamza? Hey guys, are you getting Tradingview? Oh no, that was a long time ago. There was like a message saying that Tradingview had a brownout, but that was a long time ago. All right, we're making fresh lows here, guys. What are we doing? So far, no signals. Let's even get a purple candle here, or hot pink, purple or hot pink. All right, 31 seconds left on this trade. Let's transfer over here. This is, again, a sell condition for us. Assuming, the dot stays in place here. We're not going to pull the trigger until we get the signal. Okay, sell. Nope. Stop should actually be above this candle. I'm a little bit short on the stop, giving myself a little more room here. Let's see if we get continuity here. $94.25. Basically broke the 300 level and trying to bounce back up off. We sold it right into the 300 level, which is always problematic. But I couldn't care less because we're going to come back to this continuity trade later. If it doesn't work for us now, we'll just try to resolve it later with different size. Okay, fine. We're going to stay on this. Try to resolve it differently. This was a, a hard sell was sell right into the bottom, into the round number, into the double bottom. Yeah, you know, you're not gonna. It doesn't matter what the statistics say. It's going to be hard to make that trade stick, which it didn't. It's fine. $10 o'clock hour. This is a good hour for both pull away and confirmation trades. So we will just simply wait. What's the pizza slice, astrologer? So market still sell dominant. Slope just turned a little bit green. So now we have a purple dot here. Do I really want to buy them? That's cute. I like how you call that pizza slice. I guess that makes sense. Oh, continuity the other way, guys. Continuity the other way. It's cool. Isn't it good to have that neon green? You can really see the pull away visually very, very clearly, right? I mean, you can see it on right too, but I just thought neon green was consistent with what we're looking for it to do. This thing is just running away from me. Big reversal. Ugh. I hate buying these big breakout candles, but let's do it. I got to be underneath this candle. Come, baby. There we go. There we go. Continuity in our way. Now, I'll be honest with you. Like, because of this like statistical knowledge set, you know, I kind of cheat a lot of times. I'll get aggressive like this. Right now, we obviously turned into buy block territory, right? I'll get aggressive and I'll actually sometimes front run. I'll take the white dot. I assume that in a continuity regime, the first dot is going to lead to more dots in that direction. And you could have gotten here. You could have had a really, really nice run and then add to the trade the green dot, basically trade every dot in that direction until it kind of exhausts itself. Because during this particular time, the continuity regime trades well. That really stretches the definition of we have these very clean, clear setups, right? White dot, green dot, purple dot, no dot beforehand, all those things. But if you kind of assume the broad general idea, just like astrology does, that, hey, if you're in a continuity mode, every extended trade is going to work. And if you're in a discontinuity mode, every breakout is going to be a fake out. You're like 90, you don't have to be that precise in your setups, right? You could just basically say, hey, as long as I'm on the side of the trend in a continuity mode, I should be fine. And yes, you're still going to get stopped out, but those are going to be very controlled small stop outs. And if you happen to catch a big move, let's say, this 10 o'clock hour now opens up into a 30, 40, 50, 150 point move, you could catch 5, 10 trades in a row that are continuous, that will be more than enough to pay for whatever small stops come your way, right? So, astrology, explain to me where the slice. Let's out the slice because it's really, really cute. What is the slice? Is this the slice? Oops, shit! I can't draw. If I could only draw. Brush. Is this the slice? Is this the pizza slice? Or is it something else? Or is this the pizza slice? Is that the pizza slice and then you go forward? Is that what you do? All right. That second one that I drew, this one right over here, that was the pizza slice, kind of up, down, dot, go. Pizza slice, inverse, and then go. So kind of cool. It's basically it's the triangular price action around the moving average, and then the price pulling away from the moving average, right? And you're going with that. I like it. You know what I had yesterday? Speaking of pizza slices, I gotta. Let me see if I can pull up the. Let me pull up the. This is the seminal dish. Hang on. Let's see if you guys can figure out what this is. All right, check this out. Do you guys see? Oh no, sorry, you don't see it. I didn't put it in there. Where's my thing? Here we go. There we go. Do you guys see that? It's one of my favorite restaurants, Quality Italian, Midtown, New York. Their go-to dish is chicken parm pizza. And it is so freaking good. It literally is a pizza with chicken parm, and they put arugula and parmesan on top and hot honey. It was like my favorite birthday dish. So good. So good. All right. We're looking back to continuity trades here. Let's see if we can get a white dot, green dot play here. So far, no. And you know what? I was shocked. So they have a place in the city. They have one place like in Denver, very obscure. I think the guy who my wife told me, the guy who runs the place used to own Smith and Wollensky, which is a famous steakhouse in New York, and they got sold. He's so sort of sold out. But like, I was like, this is the most natural place for Vegas I've ever seen. It's basically two of America's favorite foods, Italian and steak. And they both do it like super, super well. It's like the place was just mobbed. It was fucking mobbed on a Sunday night. Everybody, eating there. And I was like, man, this is such a natural place for Vegas. I was just shocked they don't have a place there. But it's a great concept. It is really, really good. My favorite dish. A little bit of choppiness here. Again, just because it tells us it's a good hour doesn't mean it always is a good hour. But if I get it, if this hot pink candle stays in place with a dot, we're trading this to the downside. It's a trade for us. Let me just adjust size a little bit here. Come on. "32 seconds left. Let's see if this is going to give us a signal. Oh, it's only 10:15. No trade. Oof, big reversal. Invalidating the sell block. What's going on here? A little bit of buying. A little bit of choppiness. No trade for us either way because we're waiting for the confirmation dots. Demetric, right? You've been there. If in New York, if you know, you know. Yeah, it's a really cool place. Everything looks a little choppy here today. About a 200-point range, about 480 to 280, which seems like a lot, but it's actually pretty tight relative to the notional price of the underlying right now. See if there's any news, any more headlines. Look at manufacturing. Look at that. That is a very, very bullish curve, right? Pretty bullish curve. Our markets are definitely very, very choppy. Nothing to do here. Gold also really, really choppy too. Okay. Not a great trade, but it's a trade. White dot, green dot here against 26, 27 seconds left. This green dot stays in place. We're trading it, but we'll see. So far, not quite there. Can't even get that up, right? All right, good enough for government work. We'll take the trade, and we're done. Nice. Again, not beautiful. Gets the job done. White dot, green dot, scalp it up. We're in scalp, continuous mode. Took it. Now we're getting a pull away trade, strong bullish. And I'm actually perfectly happy. It's not the pull away classic pull away trade, but I'm perfectly happy to trade that with you. I will trade it with you. With a stop underneath here on the assumption that it's going to extend. And it almost does. Come on, come to Poppy. Let's go. There we go. And it extends. And I'm kind of giving you the inside view at how I trade these things, which is that, look, I don't even need the pause candle beforehand. It's a pull away trade. We're in a continuous mode. Yeah, I'll take them, and you could take them, bigger size if you wanted to on this thing. You see, by the way, isn't the coloring nice? Give me a yes on the coloring. Come on. I worked so hard at getting the intuitive colors. The neon green is an intuitive, pull away green, right? Everybody like that? Yes, no? Thank you. Thank you, Gloria. And this makes it, again, I guess the motto for the group is idiot proof. That's going to be our pro motto, right? Yeah, so Ben, I thought about it hard about like, I'm really gonna have to change this, but I want it to be consistent with. If you think about this, white is not a bullish color. Neon green is obviously very bullish. Neon pink is obviously very bearish. It's consistent with what we're trying to do. So now we'll stay on track. I'm not going to make any more color changes. These are pretty much locked down. It really, I went through so many permutations of this until I finally locked it down. But I think the colors are pretty intuitive at this point. Leaning bearish, leading bullish, super bearish, just positive, negative. Oops, what's going on over here? So, it's quiet. 10 o'clock is super quiet. But look what we're doing. We're, because we have the data on our side, because we're using decision support analysis, we're not searching for trades. We're just taking whatever trades come our way. And, taking whatever scalps that we can at this point. I'm going to switch accounts to the 50 account, see whatever we can do with that. And gold is really quiet. Gold just died at this 10 o'clock hour. Now you get it? Cool. Yeah. That's what we need. I think astrology, I think this is, we just found our merch. We just found our merch logo. The merch logo for our group is going to be 100% degenerate idiot proof. That's it. That's going to be our logo. 100% degenerate idiot proof. Degen traders. Apex not letting us trade bells because it's back to boring. Yeah, I mean, well, no. The real reason is because they finally have a proper risk model to hedge all of their metals exposure. So they, they should be in good shape. So let me, right now we're just getting a lot of contra trend or contra flow signals in NAS, so they're not really interesting for us against this thing. I kind of want to just sort of share with you what you do with gold in terms of what's the tactics to how I would, like, if let's say I was 10 o'clock, I was just trading gold, right? So gold is a contra flow trade, meaning that we're not taking continuation trade. We're looking for kind of quick reversal trades. So here we have the yellow candle, the bearish, the mildly bearish candle, and then we have the red dot or the purple dot that confirms it. We get short here, stop over here at the red dot. We get stopped out, right? Now this is where it gets interesting, because we're always trading small, and because we're always on focused to the setup. The next setup that I would do is I get stopped out. I'm perfectly happy. I love getting stopped out here because it's a small stop. You then wait to see if the signal reconfirms itself, and it does. The signal actually gives you a second sell signal over here. So now you can come in 2 sides, 3 sides over here. Boom, recapture everything back, make money, right? Now you got nothing. You're just basically, you're still operating under the thing, but now you're getting a blue candle. That means maybe there's a bottoming in gold. And if that blue candle stays in place and you get a white dot, then you're going to trade the other way, And if that fails, and then you wait, and there's a secondary white dot comes up, maybe another 20 minutes forward, that's the dot you go into. What the beautiful thing about this setup is it's very robust. You don't care if the first or the second or even the third sequence of this scalp fails, because you're using very, very small logical stops. You can always make it back in size, or at least you can ameliorate, you not necessarily maybe make it all back on the first trade, so you can get a lot of it back on the first trade. And then when you are in sync with the market, which happens like every second hour, you're going to get like a really good synchronous market. You're just putting profits down. So the sequence is kind of like, you putting profits down, followed by a period of consolidation and chop where you are, behind ahead, equal, maybe at the end just tiny ahead, and then you're putting profits down. If you can be in a strategy that keeps you flat during the difficult times and makes you money during the easy times, that is literally exactly what you want, and that's what you try and do with a dot scalp structure, with all of the stuff that we put in here by coming in. Hang on just 1 second. Okay. Yeah, Chris, I updated the indicator, but I haven't updated it for anybody yet. It's just I'm previewing it, trying to get feedback on the indicator. For those of you guys that want the full description, it's all over here. Oh, we are, this is not adjusted. Sorry, it needs to be 5. Oops. So double white dots, that's not a trade for us. We need a white dot, green dot on NASDAQ, but we're still in a continuous mode. If we get a green dot, we're going to go long NASDAQ. It's kind of a deceptively slow 150 point here, and it looks like it's kind of flat, but it actually from the bottom over here, well, 340 to 420, almost a 100-point move. Oh, there we go. Does it hold? 13, 14 seconds. Let's see if we can make that play. I'm also just fooling around with this gold trade because gold trade is a discontinuity trade. Finally gave us, the dot that I've been looking for, and I want to see if I could, if I can make that happen for a, for discontinuity trade. Oh, did my trade get done on this one? Oops, I got stuffed on that one. So that one did not work. The really? Wait, how does that? No, what happened here? Hold on. How did I get stopped on this trade? Oh, it ticked just lower. Wait, what happened? Hold up. Oh yeah. It just ticked me up. Wow, that's weird. It doesn't have a tick over here, but it has it on thing. Okay, no problem. We're gonna go again. Wow, that's weird. That was weird. There was no tick over here, but there was over there. Huh. See, this one doesn't have, I don't have a, I have my stop underneath here, and it kind of clipped me over here on this trade. I don't know why, but fine, no problem. I should have been watching it more carefully. The gold trade worked, by the way. No trade on NASDAQ right now. So let me show you what the gold trade was. The gold trade was this idea. So blue candles, which is turning bullish, right? Turning bullish. We ignore the purple dot because there's no yellow candles in front of it. We have the white dot. That's the bullish confirmed dot. Then it kind of slipped all the way down. I was like, you know what? This is a very, very low risk trade. If I buy here, my stop is underneath this white dot. I'm gonna have very low risk. And it did pop up, and that worked in this account, I believe, 61 account. Yeah, that worked nicely. So the only account that's just a little bit problematic is this account, and we just need to find a continuity trade for NAS. That's annoying because I had the trade. I guess it just clipped me over. That's just bad luck. The stop here was literally a 2 tick of the low, and then came back up and took me out. So that happens. As I said, I am happy to get stopped out at any of those ticks because that means my risk is limited, and I can always make it back, which I will. Super slow though, guys. This is a really slow, choppy, grinding hour for us. The fact that we're able to extract anything out of this is actually pretty good. Oh, I have another trade setting up in gold. So gold, yellow to purple. Let's make that a trade. See if that's going to work for me. So the trade in gold is basically, again, it's a discontinuous market. Yellow's just showing me beginning of a bearish move, and the purple confirming it to me. I'm just trying to look for the 2-point move here, the downside. Well, gold is just like not giving you any movement at all. It's just really dead. But we'll stay with it. Sorry, I want to be on this candle. This is too wide a stop. I want to be over this. This is my stop. If it takes me out here, that's fine. So guys, I totally forgot to mention, we're going to go, I think maybe I'm even going to start tomorrow. The best hours to trade continuity, the absolute best hours to trade continuity is actually London Open. Well, not London Open, like sort of London Post Open, 5 a.m. to 6:30 a.m. New York. We're going to trade, trade this almost every single day in starting this week. And I'm actually hoping to go like Monday through Friday, 5 to 6:30 London, which is going to be great for people in Asia, Australia, Europe. And that's a really great time. It's like an 80% probability time to hit those continuity trades in those times. And we will, we'll do that and have a good time with it. All right, gold is torturing us the other way. That's fine. We'll flip the gold trade if we need to. Nasdaq's doing nothing, so I got absolutely nothing on the Nasdaq side. No, the London trades are really for like the Europeans and Asians and Australians who don't get a chance to trade that. But also, like, you know, if you want to have fun, you can have a good time with us on this. All right, so gold, if this holds, I'm going to flip it back the other way because again, I have a blue confirmed by green. Hopefully, I get a little bit of a discontinuity move the other way. We'll see. $10.11. Okay. Less tweets. Yeah, that's true. Yeah, less news flow. You just, you know, you get a cleaner look at that point. Yeah, it's true. Nasdaq just really died, guys. Look at this. Nasdaq just has showing nothing. No trades here. $91.6. Oh, just missed that by 3 ticks. 91.6, 91.3. Super close. All right, we're going to leave that alone. I'll let you know how that develops as they progress. There's nothing going on in NAS. We're going to wrap this up, guys, because I got to run. I will update this today, and by Asia Open, it will be on TradingView. So watch for it then. I think I'm going to call this BFF dots with ICT order blocks. I don't know what I want to add as a name for it. Maybe just version 2. Just keep it simple, just like V2. And if, you know, once you see V2, you will know that that is going to be the stats. Yeah, that's it, Peter. There you go, Peter. Order blocks, stats. You're right, stats. That's the really great addition, stats. With ICT order blocks and stats. That's going to be our play. Yep, that's the right play. Okay, sounds good, guys. I will get all that done, and I'll see you guys a little bit later. Today no trading tonight, but I will see you guys tomorrow. I'm actually probably going to see you guys in London. I'm gonna open up the London trade tomorrow. So if you guys are ready, by that time the indicator will be ready for you guys, and you'll be ready to trade it. Okay. Everybody have a wonderful, wonderful day. I'll see everybody later. Have a great time with all of our sponsors, and I will. I'll trade you in London. I'll see you then. Bye-bye.